Hershey started out as a division of the Lancaster Caramel Company, and that wasn't Milton Hershey's first business. 18 years earlier, he moved to Philadelphia to start a candy shop called Crystal A Caramels, which did file for bankruptcy. But after some time, he got back on his feet, moved to New York, and started another company, which also failed. But he didn't give up and eventually started the Lancaster Caramel Company, which one day started making chocolate. That business grew and it's what we know him for today. I'll cover what modern day Hershey sells, their financials, why the price of cocoa is sky high, and do a SWOT analysis. This is not financial advice. If I had to sum up what they do in a single sentence, they sell chocolate and other snacks with 87% of sales coming from the US. The first segment, the biggest segment, is called North American Confectionery. It includes Hershey's, Kisses, Jolly Ranchers, Twizzlers, Icebreakers, Brookside, and the bacon stuff, and all these others. Note that some of these are licensed and some of them are only licensed for US consumption specifically. It's deal to deal, so we'll leave it at that. The next section is North America salty snacks, like Skinny Pop, Dots Pretzels, and a few others. This section is a bit small, but it is growing for sure. They purchased Dots Pretzels in 2021, and they purchased Lesser Evil, a company that makes slightly healthier popcorn, in April of 2025 for $750 million. The final segment consists of these. These are brands which personally I have never heard of. They do have a pretty limited presence internationally, and they sell these in addition to the other products that they have that I showed you in the first two slides. This year, Hershey's took in $11.2 billion, which is essentially the same thing they picked up last year. Cost of sales, which includes the cost of, for example, making the chocolate, did decrease because they hedged the prices of their actual materials. Overall, though, they did up their price by around 3%, but the amount of sales did decrease by 2%. From there, a bunch of costs just shifted here and there. For example, higher debt balances, which makes them pay more interest, but net income ended up at 19.3% higher than it was last year. This is an experimental thing, but I'm going to take a deeper dive into the underlying problems that affect Hershey's as a business. This is just so that I'm not listing out their top and bottom line. Don't get me twisted. I am doing that too, just in addition to all this stuff. Cocoa comes from this tree right here, the cocoa tree. It grows along the equator, so most of the supply comes from West Africa and also Central and South America too. Around 70% of the supply is from West Africa. But recently though, things have not been going great. A combination of disease and flooding has restricted supply and pushed prices up. Although the higher prices do give farmers more of an incentive to grow cocoa trees, it does take 3 to 5 years to get a cocoa tree that's able to make the cocoa beans. Thankfully though, research by JP Morgan does say that the deficit is expected to decrease by 2025, although we'll see if that takes place. Hershey's revenue initially started to stay at around the same levels, but starting in 2021, they started to increase dramatically, with most of the increase in 2021 being due to sale count, while in 2022 it switched to price hikes, which has continued even as the physical count of sales has decreased this year and the last year. Now, part of the price hikes is the price of cocoa. Due to the supply issues that I mentioned earlier, it did translate into the price of the bar. Some of it was mitigated because Hershey's does hedge the price of certain materials. That's what's called a futures contract. It's when Hershey says that they're gonna buy a pound of cocoa for $1.11. But if the price of cocoa decreases, then Hershey's loses out, because they still have to pay the $1.11, even if the price actually went down. But on the other hand, if prices actually increase to, let's say, 1.5, then Hershey's won, because they'll only pay $1.11 for something that's worth $1.50. It's essentially risk management or gambling, depending on how you want to look at it. Hershey's hedges their prices from anywhere between 3 and 24 months, so they are slightly protected from its current market price. In 2020, they averaged $1.11, and that stayed right around there, but starting in 2023, they started climbing, reaching a high monthly average price of $1.90. Then in 2024, it averaged $3.45 with a high monthly average of $4.75. Now, it isn't great, but Hershey's does expect there to be a surplus in production in the 24-25 year. Hershey's net income has outpaced revenue gains at 16% per year compared to revenue's 4.3%. That shows they have competent management that is always looking to make the business more efficient. But you do have to be careful here, because if you keep just chipping away, eventually you might start chipping away at the stuff that really matters. Some overall trends in the chocolate market is the shift to child labor-free cocoa farming. Although Hershey says they don't tolerate child labor within our supply chain, there are allegations of it happening, and some consumers are simply willing to pay more to not support these practices. Health-conscious consumers also don't want to eat snacks that'll give them diabetes, and so chocolate producers are looking to make chocolate more healthy by either lowering the calorie content or just simply getting other snacks that better suit a more health-conscious younger generation. The big players in the chocolate industry are Mars, Nestle, Ferrero, and the Mondelez Group. These are the chocolate titans, and some of them have expanded out of just chocolate, but I'll compare them by revenues anyway. The biggest company by far is Nestle. I do want to highlight that Ferrero and Mars are not public companies, so the information is not held to as strict of standards. So just take some of it with a grain of salt. We can see that Hershey's is the smallest and located mainly in North America. That does show that they do have room to grow internationally, but since chocolate is a very mature market, that'll be difficult. Comparing their stock performance, we can see that Hershey's and Mondelez have been performing relatively well. I mean, they aren't growth companies and they are in pretty mature industries. Nestle's pretty flat. I mean, their net income hasn't really been increasing much, and their bad reputation among consumers definitely does not help. Hershey has a PE ratio of 18, which is slightly below all the other chocolate makers and right around Pepsi, who's in the beverage and snack business. Check out that video if you want to learn more. They pay out a dividend of $1.37 per quarter, which gives them a dividend yield of 3.38% as of when I checked this. They also do return money to shareholders through stock buybacks. You can see those here. Hershey's CEO is a woman named Michelle Buck. She's been working there for 20 years and was promoted to CEO in March of 2017. In the interest of financial transparency, she does have a relatively significant amount of shares. She has led Hershey's through the virus and will continue to lead them in the future too. Some strengths that Hershey has is their brand. From snacks to bacon stuff, you recognize the Hershey brand. With their brands like Skinny Pop, they are moving towards more healthy items matching consumers' preferences. They're also associated with events. For example, Kisses on Valentine's Day. Business-wise, they're making small but consistent progress. As for some weaknesses, they are highly dependent on the North American market. Not only that, chocolate started in the 1800s. This is a very, very mature industry and there is not much room for growth. Also, Hershey's isn't really seen as quality chocolate. It's the okay stuff. An opportunity is for Hershey's to step outside North America. Some opportunities inside the US is that economies of scale and distribution really help with selling chocolate. So they could get a brand by buying it, joining them with a partnership, or just straight up licensing it and make the chocolate to sell to the US. Some threats are there are a lot of brands who can fight for share. Because of online shipping, the need for shelf space is reduced. For example, the new Mr. Beast chocolates. Although, let me be clear, shelf space isn't not important for chocolate. It's still very important, but it's not as important. It's much easier to compete now. There's also a lot more awareness about the labor practices when harvesting cocoa. And that does not look good on the industry at all. Now, I'm writing this as the tariff talks do continue to play out. They could force the prices way up, but honestly, things could change tomorrow, so we'll just wait and see. Well, that's Hershey's, the company that started out making caramel, which is mostly sugar, then chocolate, which is slightly less sugar, and maybe in 200 years, they'll start making leafy greens and selling them all over the globe. Who knows? Anyway, guys, that's Hershey's. Like, sub, and goodbye, people.